All right, guys, welcome back to We Talk Money, Bali edition. We made it. We over the past week we've been traveling, and we're finally here. How do you guys feel?
Phenomenal. Love it. Love it. Absolutely love it. It's a little difficult with the hours, though. Not gonna lie, the U.S. stock markets, it's like morning time when it's evening time here. So I'm like 10 p.m., 11 p.m. trying to make some trades. Trying to stay
fell
up.
asleep on a trade.
Oh,
I straight
right.
up was supposed to be making a trade and went right to bed because I was so jet lagged.
Oh, that's brutal.
Slept right through it.
Isn't that how it always happens? Like
Yeah.
you go on vacation, that's when the market gets volatile, right?
Yeah.
I always tell people in our community that, you know, if you ever want a good trade, just put me on a long flight. Because usually mid-flight is when things are popping off. It didn't happen this time, but
And
that's
the
typically.
thing is, though, is people will probably ask, oh, just put in limit orders. But, like, if I'm doing trading, not long-term investing, I'm very particular about seeing the price action, like, as it's playing out to make sure I'm not getting involved in some sketchy, like, fake out breakout or something. So, like, I want to be there live to put the order in myself. Is that crazy?
No, not
Does
at
that
all.
make me a weirdo?
No, I think that's reasonable, especially when you're going to be sleeping and you don't know what's going to be
Exactly.
popping off.
Yeah.
Well, look, we're excited to be here. We've taken a couple weeks off getting all this set up and getting on the other side of the world. We're going to be here for quite a while. So buckle up and hopefully we'll be able to use this setup. And yeah, where do we even start, man? It's been so much has happened since we had the last show, and markets are moving. There's a ton of questions that have been coming in about, is this a true market bottom or is it just a bear market rally and we're going to see new lows? So we'll explore that. We've also got a lot of economic data. We've got some charts. Everybody's wondering what the hell is going on with Bitcoin. We finally have some uncorrelated price action. You know, Bitcoin's been following the Nasdaq for the past 6 months or more, and over the past month we've seen evidence that they are now uncorrelated. We'll see if that's a good or a bad thing. I don't know. Where do you guys want to start?
Last we were together, weren't we waiting for the Fed decision on interest rates and big tech earnings?
Yep.
Okay, and now that we've got that done,
We made it through.
we made it through what felt like one of the most daunting times that we've had in a long time. And the markets have been kind of surprising,
Yes.
especially in certain individual names. Like, just speaking about big tech, you know, I mean, Apple's held up, Amazon popped big on earnings, Netflix is
Apple
holding
is
up.
basically close to all-time highs again.
I know, and that's what's so wild
It's like a
is
few points right off of the high.
exactly, and that is surprising a lot of people because Apple is not even really cheap right now, right, Trav? It's not showing a value per se.
No.
But my argument in many ago shows was that people are flocking to Apple because it's just such a high quality company. And that's where they're putting their capital because they don't know where the hell else to put it, right? With negative real yields. So that seems to be holding true, that Apple is just going to chug along and it's people are trying to short it and they're just getting short squeezed. And that's kind of the theme, is that now that we've got all of that done and over with, the market is still holding and it's still okay.
And I mean, big tech is one thing, but if you look in on some of the riskier stocks, I mean, Carvana is up over 100% in the last month. You know, there's a ton of stocks like that.
So are meme stocks back?
Meme stocks are
Fubo.
back. Oh yeah, no, I mean, Bed Bath Beyond. We got to talk about that whole drama and saga, right?
Yep.
There was a stock, you know, some Hong Kong-based company that IPO'd in the U.S. with a tiny share float that went up like 15,000% in a week as well. I mean, funky stuff is happening out there in stocks. Not only like this big, you know, bear market rally or maybe bottom where we've had, you know, plus 17% on the S&P in the last month, plus 22% on the Nasdaq in the last month. But some of these individual stocks are up like 100, 200, 1,000%. I mean, Bed Bath Beyond's was up over 400%. Now we've got some news that it's, you know, about to dump.
So in
But-
crypto land, whenever we start to see, you know, random things pop off and just capital coming back in, I call that popcorn season, where, you know, if markets are down or flat, but you've got different names or different sectors popping off. That's like signs of popcorn that, things, there's interest, there's capital flow coming back in, even if it's not a definitive like bull market that sustains over the course of several months. You've got interest, you've got trading opportunities. I think I'm seeing more of that in stocks than crypto right now. Crypto land has been weird, and I want to talk about a few things on the regulatory side and also just with price action. But outside of just the kind of the random pops, what else are you guys seeing in the equities markets that are interesting? Or, I don't know. Maybe we should just tackle that question. Is this the market bottom, or is it just a bear market rally?
I mean, that's really the big question, and investors are trying to figure that out, because if it's a bear market rally, then you should be reducing exposure, selling the stuff that's riskier in your portfolio, preparing to raise cash levels for another leg down. Or if it's a bottom, then you don't want to be sitting in cash and losing purchasing power to inflation, right? So we've been looking at the economic signals, the economic data. We've been watching Q2 earnings, which, the bulk of Q2 earnings reporting season is over. And, with 98% of the S&P 500 companies reporting, what we saw was, earnings that were not as bad as feared. And frankly, I mean, estimates even going forward into next quarter have only been adjusted down like 2%. So we didn't get this massive rug pull in earnings for the corporate sector, at least not yet. That has definitely given the market some support. Then we got that big Fed meeting where the Fed, yes, they raised rates again 75 basis points at another very aggressive hike. But they said they actually started hedging their bets a little bit. If you read the Fed minutes, they were saying, well, we may actually now be at a place where we can start to think about slowing the pace of increases. And the market ripped right after that. As soon as it heard Powell start to shift his language a little bit, the market's like, oh, they get it. Like they're gonna start to become less aggressive because they can see things are starting, their policies are having an effect on the housing market, right, which has been weakening. And so it's those two things, earnings holding up, plus, the Fed potentially becoming a little bit more dovish and not being as aggressive on inflation, potentially, that gave the market a lot of optimism. And then you had short covering as well in a lot of the low quality stuff. Now, that doesn't mean we're not going to see lower lows, right? The other side of the argument is, well, listen, the Fed's still going to stay aggressive. They may not raise 75 at every meeting, but they may still be raising 25 or 50 for many meetings to come, because inflation is still printing, 8.5% year over year. That's still not a good number.
Yeah, inflation most recently came down a little bit, but when you look at the chart, I mean, you can see historically we are still way, way higher than the typical range over the past several decades.
Yep.
Well, the market knows that the Fed still has, up to 1%? That they've already told us that they're going to hike.
Yep.
So the market knows that.
Yep. Yeah, the market does know. And it is pricing. If you look at like the futures for the Fed funds curve, it does suggest that the Fed may be pausing or cutting by like the mid to late part of 2023. That's what the market currently thinks. But, if energy prices spike back up and the Fed can't get inflation under control and they have to be more aggressive with hikes, then this market is going to be surprised in a negative sense. But we just don't know. Things are so messy right now. Even the data, like we see positive data out of, for instance, inflation coming down month over month. Now, most of that was because energy prices came down significantly. Gas prices came down because, various factors, right? They're releasing still out of the strategic petroleum reserve. That's kind of a short-term fix. Some driving demand is down because of the high gas prices, right? But then you look at things like the housing market. We were just looking at a graph of the existing home sales data, which came out this week, and it was the 6th straight month of decline in existing home sales. And the housing market can have a big impact on the overall economy, as you know.
Yeah, with rates still high and with prices still sky high. I mean, I'm not surprised to see that cooling down. But one thing I wanted to ask you guys about is, I've been hearing a lot of chatter about Michael Burry basically selling everything or almost everything, and a lot of people look at that and say, oh shit, is this going to be another 2008? Maybe we can explain for anybody that doesn't know who Burry is why people would actually be paying attention to what he's doing, and do you guys think that there's any validity to that, or is he off his rocker?
Yeah, Burry is a very interesting guy. Obviously the main character in the movie The Big Short, which chronicled, his absolutely life-changing trade from 2007, 2008 when he shorted subprime mortgage bonds. And, he was absolutely correct in nailing that trade. It took a while to play out, obviously, and that's what the movie's about. It's really entertaining. I would definitely recommend going and watching The Big Short. But, Burry, after that, was looked at as a genius because he was a contrarian who saw that trade well before everyone else. He was willing to bet big on it, and it ultimately worked out amazingly well. Since then, he's had some kind of interesting and different trades. I would say his portfolio has kind of been all over the place. Like if you look at his 13F filings, even just over the last 7 or 8 quarters, for a couple quarters he owned FANG stocks. For a couple quarters he had Tesla puts. Then this most recent quarter he completely sold out of everything except for like one small private prison operator, which is kind of strange. But I would say his track record has been much more mixed since that 2008 trade of a lifetime.
Yeah.
And so I think we have to take that with a grain of salt and say he's a very smart guy, but he is prone to, being very bearish overall, just over his general history over the last decade.
Perma bear, would you say?
I would say so. He always finds ways to find the negative or the downside scenario.
Right.
And when you get that downside scenario, obviously it can be incredibly fruitful if you're right, like he did with subprime. But, if you're a perma bear too long in the wrong environment, you're going to lose money.
And this is the challenge, I think, with putting investors on a pedestal and trying to bandwagon hop on them after they've had huge trades, right? Because on a macro level, yeah, you could get one narrative right. Like even Peter Schiff has been right in the past, not at all about gold and a lot of things. But, people, when they look at someone with a past big trade, to assume that they're going to just be right about massive stock market crashes in the future, I take that with a grain of salt, right? I think it's important to look at the reasons that they're saying things could get bad or whatever their thesis is, but to just say that, hey, they were right in the past, they're going to be right in the future, I think is dangerous. And I just, on crypto Twitter even, I see a lot of people sharing that and saying, oh, he sold, I'm selling everything too. And
yeah, that's the wrong mentality an investor should have. I mean, even Buffett sold the bottom in airlines,
Mm-hmm.
right? And he's amazing. Mm-hmm. It's every investor is going to get it wrong at some point.
Yeah.
But perma bears are usually right eventually, but it could take, a decade for them to be right? Like that's the problem with that.
Yeah, I mean, there's people that have been calling market tops since 2009, 2010,
forever.
And just rode the whole damn bull market all the way up, selling newsletters about selling fear.
It is very... we talked about this before, but it's very compelling, right? Bear arguments always seem very compelling. Why, the next shoe is about to drop. I mean, last year we were talking about Evergrande, the Chinese property developer, was going to bring down world markets. Before that it was, you name it, right? Every year there's some new narrative. Every month almost, you'll see some YouTubers doing the thumbnails. Market crash coming, sell out of everything, and that's that bear porn, as we call it, is very enticing for a lot of investors, but most of the time tends to be wrong.
Yeah.
And look, I mean, Burry going to cash is probably fine. Like if he wants to go to cash for a couple quarters, there's nothing wrong with having some dry powder. It is a very aggressive portfolio move, but hey, if he's right about this just being a bear market rally and we've got lower lows, then good for him. But we don't all have to invest like that, and he's not, like you said, going to be prescient about every single thing in the market. So I don't really align my strategies with him, but it's certainly interesting. It's a very aggressive move to make.
Yeah. Well, we'll see what happens. Let's talk about some weird crypto shit. What do you guys think?
Yeah, let's do it.
So recently, Ontario and, well, I guess more than just Ontario, but in Canada, exchanges are limiting how much crypto people can buy now.
Wow.
So check this out. This was a release from an exchange. Says if you live in one of these provinces, you are basically limited to buying up to $30,000 worth of crypto that is not Bitcoin, Ethereum, Litecoin, or Bitcoin Cash. So they're doing this and tell me, where have we seen this bullshit before? They're doing this to protect crypto investors. This is a crypto exchange. Why are these additional measures being put in place? We're doing this to protect investors like yourself, to make sure that you're aware with the risks associated with investing in crypto assets. Mm-hmm. Okay, so what happened? Why are they doing this? And who are the regulators? Well, it says that they've been working closely and quietly over the past several months with the Ontario Securities Commission, basically putting regulations in place and trying to protect the little guy. So
I missed it. Is this all of Canada?
nope.
Or just one
This
province?
is you will have a limit of $30,000 if you live in one of these following
okay,
provinces:
okay.
New Brunswick,
Province.
Newfoundland, Nova Scotia, blah blah blah, Ontario, and even the Yukon. If anybody's up there in the Yukon, you're limited to this. Net buy limits will not impact you if you're in Alberta, BC, Quebec, or Manitoba. So
That's odd.
very, very picky, choosy, very political, and we've been very, I guess, outspoken about the accredited investor laws in the U.S. and how that is just really asinine, and to see stuff like this, I don't know. Obviously, I'm not a fan of it. I mean, at this point, you basically have regulators and exchanges choosing winners in a certain way and telling people, hey, you're not smart enough to decide where to put your capital, right? I haven't looked into this to see if there's any like income restrictions or anything like that, but this just sounds like across the board. It doesn't matter if you're worth $1 billion or 100,000, you're limited to buying $30,000 of non-large cap crypto.
That would be
in a year.
nuts if it didn't have some type of income gauge or restriction. That would be pretty
Even if it
crazy.
did, yeah, even if it did, like it to me, it's just out of this world crazy. What do you think, Trav?
Yeah, I mean, it just seems like a number pulled out of a hat, and for what reason? Like you said, like we don't need to, there's certain protections that should be in place in financial markets so there's not like widespread fraud, but you shouldn't restrict people from willingly being able to invest their capital where they want to.
100%.
In most cases, like it's just silly.
Are they fearful of the currency being decentralized?
Well, I think they've seen, with all the volatility in crypto, regulators obviously don't want to see a lot of people lose most of their wealth in crypto, but I think that's part of the culling
But they
process.
can lose it in meme stocks.
Yeah, they
Got
can lose it in meme stocks. They can go to the casino. They can buy lottery tickets. Like, they can do all this stuff. But to be able to speculate in the startup realm or in crypto world, no. That's where we draw the line. That's too risky. To me, that's just bullshit.
Agreed.
Yeah.
So, we've seen over the past month or two just a wave of regulatory actions, and they recently shut down Tornado, which was a mixing service, and arrested the founder or one of the founders. And I haven't seen enough information about why they arrested him. He could have been inside helping people actually launder criminal money. I'm not sure. But to take down something like that is a pretty big deal, and it sets a precedent that I think is kind of dangerous. Tornado is just code, right? It's a decentralized service to mix your coins, and governments around the world are taking a pretty hardline stance that we don't like anonymous money. We don't want you to be able to move money anonymously, and this is where the battle's happening, right? We've been talking about this for several years on the show about central bank digital currencies and where this stuff could be headed, and I just think it sets a very dangerous precedent, and the fight is on,
Yeah, it's really important that we battle back. I mean, what we've seen with government overreach just more broadly, obviously in crypto for sure, but even more broadly outside of that, right? We just came off the pandemic where a lot of people's freedoms were stripped in many different ways. And we also have, in the U.S., like fights over, women's health care and women's bodies and things like that, right? So it's an interesting time, and I can't remember in my lifetime a time when it's happening across the world in so many different places. Mm-hmm. And these battles have to be fought, like especially among young people looking to innovate, people looking for technological progress. Like, we've got to battle back. We've got to get involved in like local politics, state politics, provincial politics, so that we can kick some of these like old people out that don't know what they're doing.
Yeah.
And start to actually affect policy. Like, because if we don't, then the reality is like government, the nanny state is going to take over. Like, and I'm not one to be like, usually I'm pretty like calm about stuff like this. Like, I'm like, okay, there's a lot of conspiracy theories that float around about the state and how there's,
optimistic. You're usually.
Yeah. I tend to be pretty optimistic. You're right. Yeah. But seeing so many different things over the past 2 years has made me realize that it's happening more broadly and more quickly than ever before. And it's alarming. Like, it really is. Like,
yeah. And I think the challenge is nobody smart wants to go into politics.
Yeah.
Like, what sane person would want to throw their lives into that field and just have the barrage of haters and just weird stuff that happens to politicians? I don't know.
Yeah, at the national level, it
Yeah.
seems like it's becoming like a game of who can say the most ridiculous stuff and have the most ridiculous policies and anger people the most, right? And just like
And
Get your
take
base
credit for
riled up.
things that they didn't really have that much to do with.
Yeah.
I mean, I've seen a lot of that lately. It's like the political landscape is pretty gross.
Yeah.
Well, we can move on. We don't need to be depressed about this. Well, but I think it makes sense to do what you said, like try to affect change. And, you know, for anybody that's watching this show that has any ideas, reach out. Let us know how we can help. With that said, let's jump into the charts. We've got actually quite a bit to talk about, looking at some technical analysis and a couple of different trades that we've had recently. Let's just talk about the broad ideas here. What's happening? First and foremost, I want to look at the stock indices. The Nasdaq and the S&P are either touching or right below the 200 period moving average. So stocks have had a pretty aggressive bounce off of their lows in mid-June, right? They're up about 15 to 20% from the lows. And right now they're at a very, very key pivot point. And this price action actually looks very similar to 2008 with the lower lows and the way that we did have this kind of bounce. So this is why I think it's right on time to ask that question. Is this a bear market rally, or are we going to break back up above that 200? I think just technically, if we get back up above the 200 period moving averages, there's not really a whole lot of overhead resistance. Now, does that mean we're going to go right back to all-time highs or chop around? I don't know. The one thing that I do know that I've been really focused on is the correlation between the Nasdaq and Bitcoin. So over the past, really since the market high, as stocks and crypto both started to crash in Q4 of 2021, you know, Bitcoin and the Nasdaq have been tracking each other very, very closely until right back here in late July. So for the last few weeks, the Nasdaq has been heading higher and got above the 100 period moving average, where Bitcoin around that same time point right here around 25K hit resistance, and this week has actually had a rejection off of the 100 period moving average, and as of today is breaking a pretty key trend line of support. So, you know, I've had a couple of anticipatory buy probes. I've also got a short hedge on. I'm not really slinging size here because I was waiting for some confirmation of direction. And I think this is kind of the first sign of uncorrelated price action that we've seen, right? Where the Nasdaq just continues to kind of grind higher and Bitcoin has not been able to catch a bid. It's been interesting to see that. And then also, we've seen a little bit of relative strength actually in Ethereum over Bitcoin. If we look at the ETH BTC chart, you can see that ETH BTC is right back up to multiple multi-year resistance. And I don't know, I think this is interesting to see a little bit of strength in ETH where Bitcoin has also been showing weakness. Now, obviously with the merge, there's been some anticipatory buying, and ETH is kind of in no man's land right now. You know, it's at resistance, but it's above the 100 period moving average, but below that really key resistance level of 2300, which is also the 200 period moving average. And across the board, most alts are just showing a lot of weakness. So I don't think we're out of the bear market yet in crypto. I think that at a minimum, this is going to take several more months of an accumulation range or fresh lows to really get capitulation. I don't see signs of an immediate reversal or any kind of like evidence of just strength. You know, I'm just seeing weakness everywhere.
Mm-hmm.
Does this bear market rally, right, because that's what it is right now until we know more, feel different to you in any way? Does it feel like a bear market rally, or does it feel like maybe something else?
That's a great question. You know, it sort of feels like a bear market rally because the stuff that got the most beaten up was what has rallied the most, and it tends to be on the lower quality end of the spectrum. But that would probably also happen if we did bottom as well. So like they say, you know, when you're in the true depths of a bear market and you're actually like at the bottom, you want to buy the best and you want to buy the worst, because the worst stuff that actually survives the bear market's going to end up being the highest on a percentage gainer term, and then the best stuff will obviously then start to compound at positive rates again and do very well as well. So you would expect to see some of the low quality stuff rallying, but I don't know, it just strikes me as interesting that the stuff that I've really seen moving the most over the past couple of weeks has been really junky stuff for the most part. And even stocks that where we looked in at the earnings and the fundamentals actually did deteriorate, you could actually have made money on some of that stuff. You know, Coinbase, Blue Apron, which we actually took that meme stock trade. But look, the quarter was nothing to write home about. The quarter was actually bad. They lowered guidance for sales growth going into next quarter. So it was odd to see. I'd actually cut some size back. This was frustrating because we had put this trade on around $3 a share. There was a lot of funky stuff happening with an insider buyer, and we were waiting for the swing trade to work. It kind of worked for a little bit. It sold back off. They reported this quarter. It was kind of a stinker quarter, so I reduced my position size, but I kept a runner on. Then all of a sudden, you know, the Bed Bath Beyond meme stock thing went crazy again. Blue Apron went up in a sympathy play, and the stock went from 3 to 6 in like a few trading sessions.
Yeah.
So was that like basically a sympathy play on BBBY?
I think so.
Yeah.
I think
Yes.
so. Yes.
Low
So, and
floaters.
this is
low
what I mean by
floaters.
like popcorn season, right? Like you've got interest in the markets. The question is are these pop and flops, or is this going to lead to like sustained momentum over the course of several weeks and months that you can ride swing trades, right?
Yeah.
Or are these just anomalies where it like squeezes shorts, you get the pop, and then it's right back at lows in the next few weeks?
I personally think that we are moving into a period where this could build momentum for swings to work going forward.
Mm-hmm.
I am of the mindset that the bottom is in.
Oh, you heard it here, folks. Nikki says the bottom's in. Let's go.
I
All
think
right.
that we could absolutely get a correction from here and it's due, but I think that we could put in a higher low in the indices. And I think that swing trades are setting up pretty nicely from here. And I've been preserved because my whole thing with all of this was I was deploying capital for the past few months, right? When the market was selling off, I decided I don't know what the hell's going to happen because all this data is crazy and all over the place. And I've been talking about this tug of war for a long time. So I deployed capital because I didn't know and I didn't want to, miss out. And then I kept capital for figuring out, if we're going to see more lows or not. I'm feeling a lot more confident now in deploying the rest of that capital on a pullback from here.
Okay.
So I'm seeing a correction as a dip buying opportunity. And I think a lot of people out there have been hanging on to capital. And after seeing the run that we've had, even though we've seen bear market rallies before and we know how this story goes, I think that there are still a lot of people with cash on the sidelines that they're going to need to deploy it. And I think that that could put a bid in the market to some level.
Yeah.
Unless the economic data completely goes to trash.
That's my question,
from
right?
here.
Let's map this out. So in our community, for anybody that's in the wealth building community, you guys know how we think about markets. It's not from a predictive standpoint. It's from a looking at the possibilities, weighing the probabilities, and then creating plans around all those, right? So what are the possibilities on like the fundamental kind of macro level, right? Like I think inflation obviously is the hot topic. What happens if inflation stays high? What happens if we get a crash in inflation numbers and they're right back to, pre-pandemic numbers? How does the
Won't
market
happen
react?
for a long time.
Okay. So let's just quickly, I guess, you guys give your thesis on the macro possibilities, probabilities, and Nick, you said you're already deploying. You're pretty bullish. Trav,
I
what
wouldn't
do you
say
think?
that I'm pretty bullish, but I'm not very bearish from here either.
So you're not afraid of a pullback.
I'm not afraid. No,
Yeah.
and I've been very clear about that. If a pullback comes, I've got capital ready to go. I just don't know if we're going to see new lows.
Yeah. Trav, what do you think, man?
Yeah, I've been on a little bit more the other side of the fence. Like I'm not like in total bear mode, but I have been like more cautious. I've kept the hedges on. Haven't really done a whole lot this summer as far as adding new positions. Most of my trades have been, except for the Blue Apron swing trade, have been taking exposure off in some of the more risky stuff I've got that's rallied. So the reason that I'm still kind of waiting to see some confirmation that, you know, this isn't just a bear market rally is because there's two things still that concern me. Well, really three things. One, the Fed is still out there. They obviously still, even though they kind of hedged their language at the last Fed meeting, I still believe that they're really focused more on inflation than anything else. And they want to have credibility with the market that they're going to make sure inflation comes back down to their 2 to 3% target. So the Fed is still a boogeyman out there that can really upset markets in ways that can happen in a hurry. We don't get a Fed meeting until September. They get a couple more data points to make that decision on, obviously, which will help. But that's still looming. Second thing is energy. That's still a wild card. I mean, with the SPR releases, it's hard to know what happens when that slows down. Like,
what's SPR?
The Strategic Petroleum Reserve. So one of the things that's helped in the U.S. market, helped energy prices cool off a bit, is the fact that we've been releasing large amounts from the Strategic Petroleum Reserve, which is helping the supply-demand balance in crude oil specifically. But you look at natural gas, it just went above $9 per MMBTU. It's been going parabolic. European electricity prices are frankly just alarming. Yeah. I'm concerned about electricity prices in Europe putting most of Europe into recession. The UK, even though we got a little bit of a cooling in inflation in the US, you look at the UK, they had the highest inflation reading they've had in decades.
10%.
Yeah, they just busted through 10% a little bit, right?
Yeah, it was 10.8, I believe. 10.8 year over year. And the situation is getting worse, not better, in terms of electricity prices there.
And they're having a crazy drought. I know, like in Germany, the rivers are at those lows where you're starting to see the stones that say, if you see these stones, cry because a famine's on the way.
Yeah.
Oh.
It's pretty crazy.
Yeah, look, I don't want to be a doom and gloomer, but there's things still that are concerning out there. And so those are the things that are still weighing on my mind. But it's tough to call. I mean, it's certainly not clear, but I think we move into a more volatile seasonal period here in the fall with equity markets as well. So September, October, November tends to be more volatile. So I'm just sort of kind of waiting it out. It's not like I didn't do a bury. I didn't pull a bury and sell out of everything.
Yeah.
But I haven't taken my hedges off. I'm kind of just waiting to see.
So you've still got short hedges.
Yeah, but I still have a long portfolio. You know, I'm still more broadly long, but it's one of those things where I haven't been adding a whole lot. I'm kind of waiting, and you know, if I miss some opportunities, I miss some opportunities. But I'd like to have some cash to buy stuff lower if we do get another leg down.
So if the markets crash in the fall, are we just going to go surfing every day, all day?
That sounds like a good way to deal with it. Yeah,
there we go.
It has been kind of wild, the volatility in the portfolio, like the balances. I've been like logging in and I'm like, oh, it's like, you know, immediately when you log in, like what's going on. There's been a lot of ups and downs. I posted an Instagram reel about what it's felt like these past few years.
Are you over checking your balances?
Being on a roller coaster. It's felt like being on a roller coaster. We went, you know, highs, lows, everything in between. And it's just funny. We've been on a wild ride for the past 3 years.
My dad, whenever I talk to him, he's like, today was a good day. The markets are green. I can eat peanut butter and jelly again. And then when they're down, he said, oh, it's a bad day. You know, the markets are red.
Yeah, he looks every single day.
Yeah. I mean, he does it in a half joking way, but I know he like cares about it. And I just like, got to tell him, Dad, don't pay attention day to day. Turn it off.
It's a tough time for retirees, man.
Yeah, the boomers are worried.
They honestly, COVID couldn't have hit at a worse time for them.
Mm-hmm.
So I'm sure they're happy to see the markets recovering. I guess the big question mark is, are they going to stay recovered, or are we going to, you know, have more pain ahead?
Yeah.
But Trav, you make great points. I mean, there is contagion with Europe and even China, you know, into the U.S. markets. And that's something that I'm not an energy expert. I understand what's going on broadly, but I don't really know, you know, what the solutions are, what people are doing about it. Like, because I know that that's a process to get more energy online that's sustainable. And yeah, it's definitely a wild card for sure.
But you make great points too on the sentiment and positioning side. Like we were just looking at all the 13Fs that came out for the hedge fund filing, showing what they owned at the end of Q2, and what I saw was a broad degrossing. Like you can see that hedge funds net exposure is still very low. You know, there's a lot of funds that are still out there not positioned for as if the market, you know, has hit bottom, and so like they could end up chasing
Right.
things higher. Like if we continue to move higher, they probably have to get involved and actually, you know, chase stocks through the end of the year at a certain point. So
Right.
that buying pressure
They were-
could come in.
yeah.
I mean, you're right that people have been almost too bearish, and you know, I don't know if we get enough muddling along in corporate earnings in the economy through the end of the year, like those funds are going to have to step back in and put exposure back on. They can't remain out of the market or at low net exposures for a super long time.
Yeah.
I think that right now, like I looked at the 2008 sell-off in the S&P 500, and basically the minute that it got over the 200-day was when the bear market was over. Like throughout all the bear market rallies that happened, we never peaked through or poked through the 200-day moving average. So I guess this is going to really, like for me, if we do break above, and this is just, you know, my technique, using the technicals here, obviously this is not a sure thing. But if we break through the 200-day, I think that I'm having a hard time seeing new lows.
Yeah.
If
I
that
agree with that.
happens.
I think
Okay.
we're at a really, really big pivot level. And when you look
Right.
at the chart, I mean, this is almost uncanny how it's kind of tracking 2008.
Right.
But just because it's similar doesn't mean it's going to repeat, right? And I think that's a mistake that people make is they try to predict the future with the past. But we are absolutely at a massive pivot level.
It kind of kissed that 200, right?
Kissed
and
it.
came off it a little bit.
Yeah, the
Kissed it.
S&P's at it. Nasdaq hasn't quite tagged it.
Okay.
But all the the Russell 2000's also at it. So yeah.
But my thought process with that whole thing is, a lot of people have been positioned short. So it's very possible that a short squeeze alone could push us through the 200-day moving average, even though it's not fundamentally justified. And then two, I feel like a poke through the 200-day would completely change sentiment all around across the board, and that alone will bring dip buyers into the market, I think. So that's what I'm watching.
There's open air. We have a month before the next Fed meeting. There's really not any major corporate earnings news that's going to come out. I mean, there's a few companies still reporting, but the bulk of that's already done for Q2.
Yeah.
So unless companies start pre-announcing, there's really not much earnings news to be had, not much Fed stuff. There's maybe some macro data points, like we'll get another unemployment report. We'll get, I think, maybe one more inflation report before the next Fed meeting. But I don't know. There's kind of like open air, like as far as like news items are concerned.
Yeah.
Yeah. I mean, well, we'll
It's
have
hard
to
to
see.
say,
We'll
right?
have to see. I'm loving seeing the traders back. I'm kind of, as a trader, I'm loving seeing the meme stock stuff because I've been like, okay, the market needs a little something to get excited.
Some excitement, yeah.
Some excitement, even if it's degenerate excitement. Like,
It's boring. That's why I
take
love
advantage
popcorn
of it.
season.
Yeah,
you
yeah.
get a couple trades here, and you know, I'm just looking for evidence of a bottom in Bitcoin, which we haven't seen. But as soon as I start to get evidence, I'm ready to go.
Yeah, I mean, it's interesting too. Like you were saying earlier, like I don't think, you know, relative to the Nasdaq, Bitcoin really hasn't made the same type of move yet. Whereas typically, like you would see, you know, Bitcoin potentially have more beta even than even the Nasdaq. So
Yeah.
like Bitcoin could be one of those trades where maybe that's one to catch on the later side. Like if we did bottom, the bull market continues. Like I could expect, or I could at least anticipate potentially Bitcoin moving a lot higher if we have bottomed.
Yeah. I'm perfectly fine with Bitcoin being still pretty far off the all-time highs. Like right now, from a percentage basis, Bitcoin's about 65% off all-time highs. It was over 70% off all-time highs. But if we just look at the last leg down from the spring and we run a Fibonacci retracement, you can see the Nasdaq has basically made a 61% retracement of the last leg down, where the same price action in Bitcoin has only had a 23% fib retracement.
That
So-
is interesting.
yeah, so that does show a lot of weakness in Bitcoin
Yeah.
compared to equities. and that's okay. You know, we see Bitcoin go up a much larger percentage than stocks and bull markets, but we also see it pull back much deeper in bear markets.
But you would think it being more volatile than stocks, we would have a stronger retracement in Bitcoin. That's very, very interesting.
And look, it could play catch up, right?
Yeah.
Or
Yeah.
tomorrow.
And that's
well,
what
I
I'm
guess
saying is like
Yeah.
maybe that's one of those like trades that could be taken still to capture upside if we have bottomed and we start to and we break the 200, we break above the 200 in stocks, you know, convincingly. That could be a nice trade even for equities traders is to hop. I mean, GBTC is trading at a 32% discount to NAV.
Yeah.
And then on top of that, I mean, right? I don't know. That's an interesting trade potentially, but
This is like the opposite swing of market sentiment from what we saw at the highs, right? Like right now, we are seeing capitulation. We're seeing the, you know, just the rage quitting and all that stuff. But the price action just isn't confirming strength yet. So I actually would prefer if we stayed in between 18 and 25K and bounced around for a couple of months and then gave us an accumulation range. Just right now, it just feels a little early. But again, if stocks rip the 200 period moving average, Bitcoin could absolutely follow. It's just we are seeing relative weakness right now. So got to be careful.
The more that I think about this, I've been wanting to ask you, like, how is the crypto community doing with all of the stuff that they've been through? And now I'm thinking about it more, and I'm like, this relative weakness actually makes a lot of sense because I bet you crypto traders are more fearful than stock traders or stock investors, and they're maybe more hesitant to get back involved because a lot of people in crypto were newer, and after probably getting in at the top and experiencing a 70-80% drawdown, maybe they're just more fearful and there hasn't been enough demand, and that's why there's a weaker retracement. I'm just like talking this out loud, like why? Because that doesn't
I mean, it's nothing new to us, right, that have been in the crypto space for a long time. This is what happens every single time. It goes up bigger on the way up and it pulls back deeper on the way down. The only difference is we actually had like correlation with the Nasdaq for a while, which in the past it's kind of hit or miss. But when markets are fearful and panicking due to either COVID or a recession, all risk assets kind of move together. The only thing that we've seen recently is Bitcoin has not had a big enough bounce to the upside yet. Right. So I don't know. I think there's still a lot of shit coins out there with massive market caps that need to die. So I think the altcoin market is going to take a lot longer to recover, if ever. I mean, I say this every market cycle. I'm like, I don't know if we're going to exceed prior market cycles with altcoins. Bitcoin is in a category of its own to me. And, I put Ethereum and a few others in kind of a different risk bucket, but there's still a lot of shit coins that need to die that haven't died yet. So,
yeah.
Survival of the fittest.
Yep. All right. We can go ahead and start to wrap it up, but I wanted to talk about this survey that I did a few weeks ago, actually almost a month ago. I was curious what everybody's net worth was. I said, what is your current net worth?
How nosy of you.
Yeah, very nosy. I started to pry. I was just curious. We know what the averages are and we know what the quote unquote 1% is, but I was curious, like, what are my followers? About 40% have less than 100K, 100,000 US. Also, roughly 40% have 100,000 to a million. About 12 or 13% have in between 1 and 5 million, and only 7.2% have a net worth of over 5 million. Now, I know that's much higher than the national averages, I believe, but I wanted to just ask you guys what advice you would have for people at those different levels. Like for somebody that has less than 100K, what would you do to grow your net worth? If you have, somewhere maybe around $1 million, and then if you're over 5 million, what are the different strategies, or like what, if any, things would you do differently at those levels?
Good question.
And
okay, so go ahead.
Okay, I'll just tell you what I did, because I actually posted like my first short on YouTube where I was like, I got asked a question like, hey, I've got 20K to my name, I'm 20 years old, what altcoin should I buy? And my response was like, well, don't fucking buy altcoins right now. Go generate income, go generate revenue, because if you put that 20K into the markets and you lose it, it's a lot harder to go from 0 to 100K than $1 million to $5 million, right? Like compounding works further on down the line. So my advice was like, yo, just go work hard and generate revenue. And the best way I know how to do that is through high ticket sales. And I'm like, you could either go work for a company that sells high ticket stuff and pays big commissions, be an affiliate for high ticket offers, or if you have an expertise and you can offer high ticket products. And then I was like, yeah, I have a thing where I've made, over 10 million in sales on high ticket items. That was just my kind of knee jerk response. And I got a lot of like haters on that. Oh, you're just saying go to work. Yeah, go the fuck to work. Generate revenue that you can take cash flow and put it in the markets. But to swing for the fences with a small account, I think is just highly risky. And you're going to put yourself in a really bad situation if you draw down 90% of 20K. Yeah. I don't know. That was my advice, for better or worse. And look, I'm the crypto trading guy. I want people to trade crypto, but they have to do it smart. And I think it's easier if you have a larger capital base to go from 100K to $1 million, $1 million to $5 million. 20K to 100K is tougher in the beginning.
It's kind of a double-edged sword, because you probably know a lot of people. There's probably a lot of people in our community that they didn't have a lot of money and they took maybe 5 or 10 grand and put it into Bitcoin 10 years ago or whatever, because they saw you on YouTube, and sure enough, they ended up making, 10, 20, 30, whatever X their money.
I have heard from thousands of people that have done that.
So, yeah,
I just don't want everybody assuming they can do that.
Right. And that's why it's kind of like a double-edged sword. But I completely agree with you that the focus should be on increasing income.
Yeah.
Absolutely. Because you can, everything like tax strategies, investment locations and allocations and all of that is all important no matter where you're at. But I think it does become significantly more important to focus on some of those more advanced things as your net worth grows, and just focus on generating and growing your income at a certain, at the beginning level, at the beginning stages.
Yeah.
Right.
Because when you have $5 million in the bank, what's 4% of $5 million? If you look at the safe withdrawal rate, right? Like
200K.
Yeah. So 200K a year, right? Passive income. That's awesome. But if you have 20K in the bank and you have a low income, like that, it's just harder to get that wealth machine momentum going.
Yeah, I would say that there could be a nice balance between both, maybe not shit coins, not all coins, not meme stocks. No, like when you're first starting out and you have that initial nest egg of net worth, you need to treat it with respect, and you can still invest it a little bit, here and there if you wanted to, but do both. Focus on that and also focus on generating income. And then once you get to the higher net worth levels, the 100K to 1 million on, it's like, then you start to think about things like tax strategy. You start to think about things like asset location. What kind of accounts are you putting certain types of assets in for tax strategizing purposes? That's where, as the money gets larger, you're going to want to really think about that stuff a lot more, and don't just like put it to the wayside. That's my advice.
Good points. Yeah, swing for penny stocks.
No, I think you have all said it really well. I think a lot of it comes down to how you focus your time, because I think a lot of what we're talking about here relates to like how much time are you focused on this, right? If you have 20K of investable capital, it's going to take a long time for the compounding effect to get you to 1 million, 5 million, 10 million, where your passive income just becomes so high that it allows you to live an amazing lifestyle. But if you have 20K but you're spending 7-8 hours a day trying to figure out what the next meme stock trade or the next shitcoin trade is, you could be taking that time to increase your income so that you have an extra 50K next year or 100K next year of income that would then put your portfolio at a 6-figure level, where it starts to become easier to make higher dollar amounts with easier investments.
That's why I love you, man. You're so that's perfectly said, right? It's like time matters, right? And if you're sitting there trying to day trade for 10 hours a day, that's a really bad use of time.
Especially on a low capital
agree,
base.
yeah.
Yeah, exactly. But if you have 20K in the bank and then you start hustling and you make 20K a month for a year and you're able to save 50% of that, and then you put that money in the markets, it's like it just hyper grows. Like it's way easier that way.
I think the mistake people make is trading first.
Yeah.
Period.
Yeah. You can take some shots, like you said. Like, just don't be spending all of your time focused on that if your capital base is too low.
Yeah.
Like,
Right.
definitely still take some shots if you want to buy BBBY or some, thing that you think can go up at
AMC.
1,000%, fine.
Yeah.
But don't be spending 6-7 hours a day focused on that on your screen. Be spending your time, if you have a 20K capital base, trying to increase income first.
Right.
Take some shots on the side. You're going to, look, let me just give you an example of my example, which is, not that common, but basically the first few years of my professional career, I was working a high income job, working for a hedge fund. Some of our bonuses when we were doing well were very large, 6-figure, even 7-figure bonuses. But the first few years, like, I wasn't focused as much on using that capital to 10x it. I was focused on paying down debt, buying property so that it reduced my monthly, my monthly cost or whatever, building equity in the home, doing other things that essentially like this is how rich people get richer and get ahead of everybody else. It's when you get to that certain level, you've got things like paid off, or you have the capability to devote more time then to investing in angel investments, VC, whatever it is, right? I didn't do that right off the bat. It took me the first 5 years of my career focused on, I'm going to work as hard as I can at the hedge fund, earn as big a bonus as I can. All I was focused on was figuring out, how do we make investments at this fund that will earn me the highest bonus. That was the income focus. And then later I shifted towards, okay, now I'm in the mode of, where do I put my assets? Do I invest in angel investing? Do I do crypto? Do I do stocks? Do I do rental income properties? But you shouldn't be doing that on a 20K income base,
No. Right.
or 20K asset base.
And that's why I initially said to the kid, I was like, hey, do high ticket sales, because the barrier to entry is nothing. Not everybody can go get hired by one of the best performing hedge funds, right? That's harder to do. It's a smaller pool. You went to school, you worked for Goldman, stuff like that, right? But anybody can bust their ass and do high ticket sales. I don't know. I just think focusing on 90% of your time on generating income, and then learn to trade, learn investing, but keep that minimal in the beginning.
You will probably make more money taking the time you are going to take doing trading by learning a skill. Learn a new skill that you can take and charge somebody to do it for them or whatever, you know?
Mm-hmm.
So using that time to just build up your skill stack, I think, is way more helpful than trading.
Yeah, it could be software engineering, could be design, could be a million different things. It could be, gaming.
Website, making a website,
Yeah.
marketing. I mean,
Yeah.
people, all kinds of different things. And then that's how you can charge your high ticket, because you've built up this skill set.
Yeah.
Hear, hear. Well, I think that's a good place to leave it. We've covered a lot. I think we've been going about an hour. So,
Awesome.
Any final thoughts? Anything you guys want to talk about before we wrap it up? I know we've actually got the new YouTube channel for We Talk Money. So it's youtube.com/We Talk Money. We're going to be moving the full episodes over there. We'll probably post this one on both channels. But we're going to be doing clips and full episodes on the new channel. Also, check out the wealth building community. I know a lot of you guys are a part of that. If you're not, go to wetalkmoney.com/community. What else, guys? Trav, you're doing your podcast. How's that going?
It's going great. Yeah. If you're interested in daily stock content, I've got my podcast up and running now. I've been doing it for a couple of months, or 4 or 5 weeks. Stocks and Coffee. You can find it on Spotify, Apple Podcasts, wherever you listen to your podcasts. So Stocks and Coffee with the Stock Geek, if you're interested in stocks.
If y'all didn't know, Travis drinks more coffee than water in a day.
Uh-oh.
I'm just kidding.
That sounds
No,
about
but
right.
you love coffee.
That's true.
Yes.
And stocks. It's perfect.
It's great. Yeah.
Trying to get used to this time zone. I've been sucking these things down all day, every day, just trying to get over this damn 12-hour time change.
Are you still feeling it?
Well, no, I feel good. I'm just waking up real early. I'm bright and awake at 4:30 in the morning. Just ready to go. I'm like, okay, here we go, I guess.
Hey, maybe you should learn how to surf.
Yeah.
That's the time to get out there, right?
Absolutely, man. All right, well, guys, thanks for joining us today. Thanks to Nikki and Trav for being here. And Yeah, I don't know. I'm stoked to have a new place to be able to film this with you guys.
Absolutely, yeah.
It's pretty dope,
Yeah.
actually. And they have good food and coffees.
Yes.
Yeah, it's a great place to play and work.
Absolutely. All right, guys. Sub to the channel. Like it up. Share it up. We'll see you guys next time. Take care.
Cheers.